I'm Bob Burnett, and this is episode 9 of Old Man Yells. I've had some people say to me, "Hey, on your Old Man show, you don't yell enough." Well, I can't promise I'm going to yell today, but I am pretty mad, and it's something that's bothered me for quite some time. I've talked to some people about it privately over the past several months, but I'm going to discuss today Core Scientific and the impact that they've had on our industry. Guess as a little bit of background, let's start with we've been in a bear market for quite a while. And I think a lot of people look at the bear market and they look at the key players in that, and they'll come up with FTX and Voyager and Celsius and BlockFi. And they'll point to the greed and corruption and ineptitude that accompanied all them. I think maybe we could call them the Club of Infamy class of 2022. And I think deservedly so. They hurt their shareholders, they hurt the users of those services, the whole Bitcoin ecosystem. They screwed up capital markets, they screwed up allocations, price discovery, lots of damage to innocent people. And when I look at that, I go, well, I think there's a name missing from that list, and that's Core Scientific. Now, when we look at Core Scientific, what I see is an amazing story of greed and hubris, overconfidence, and something that happened in just an amazingly short period of time. The speed with which they blew up themselves, but also caused massive collateral damage, is just jaw-dropping. When we look at what they did, I think it all goes back to when they went public. It certainly was an inflection point in what happened with them. And for those of you less familiar with it, there are really two ways companies go public. The traditional way, and I was part of a management team back in the 90s that took a company public, Gateway. The traditional way is really something that usually takes a couple years of preparation. And even once you declare that you're going to do it, it takes about a year. Lots of work with regulators, lots of work with underwriters, meetings with market analysts, doing tremendous work internally to make sure the organization is ready. All the processes are in place. The reporting is in place. The right personnel is in place. All those sorts of things have to be ready. And then on top of that, there are external dynamics that, determine whether or not you're going to get valued properly. Because certainly, like when I was in the market in the 90s, we had to look at, hey, how was the overall PC market looking? How healthy was the overall economy? So all those things kind of play into when you make that decision. Now, there's a second way that's become more common in recent years. It's called the SPAC. It's kind of like a backdoor method of, kind of essentially skipping a lot of steps, less paperwork, less regulatory rigmarole, and, just less rigor in general. And it has advantages and it has disadvantages. As you might guess, Core took the backdoor route with the SPAC. It didn't violate any laws. I'm not accusing them of doing that. But it's very clear they weren't ready. And that had they followed the traditional process, they would have seen that they weren't ready. They would have gotten probably the right market signals that they weren't ready. It's a tough thing. But at the end of the day, what you can see is that the team that took them public was behaving with high time preference, with greed, and they didn't have the experience to evaluate themselves and know whether or not this was the right thing for their company and for the Bitcoin community on the whole. Those of you who heard me talk before may have heard me make this statement before, but I believe it is not possible to be a public company and operate a public mining company, to be specific, and operate consistently within the ethos of Bitcoin. And I believe that as a Bitcoin mining company, whether public or private or whatever, that there is a obligation to operate within the ethos because we are protecting the base layer. And above all else, whatever happens with Bitcoin, if the base layer is safe, if the base layer is protected properly, then Bitcoin wins. So I've been able to read, I have the pleasure of the internet, right, and Google. So I've been able to go back and read Core's filings. So I started with their S1, which was the document that they filed their IPO under initially. And that was filed on January 20th of 2022, not that long ago. And if we kind of go through some of the highlights, if we look at it, go the first 9 months of 2021. So this is what this is kind of the information they were reporting before they went public. They had reported a net loss of $13.2 million. And they had already had a fair amount of debt, and that debt was had cost them in those first 9 months over $26 million. If you think about what was going on in that period, which would have included the China mining ban, the fact that they were not at that time operating at a profit should be a red flag. Because if you were a mining company in the summer, say from June through September of that year, and you didn't make a shitload of money, then something wasn't going right. Now, as you read that document, of course, you'll see some evidence of what was kind of going on. There's a statement that says a significant portion of our assets are pledged to senior secured note holders. So they had gotten most of the equipment running in their operation via debt. Now, I'm not going to call that a red flag. We'll call maybe that a yellow flag. But I did find it very interesting. My company, not that my company is perfect, we are not. We are a private company, but we had always chosen to grow organically. Debt essentially has not played a role in our organization. We've used it very tiny amounts of it for very short periods of time, but really try not to use it at all, and certainly wouldn't use it to try to grow at some exponential level. That's where problems come in. Now, this next statement, I'm going to read it verbatim because it is directly from their S1 filing. It says, "We have identified a material weakness in our internal control over financial reporting." I'm going to read it again. "We have identified a material weakness in our internal control over financial reporting." Oh my God. This is a company filing to go public, yet they openly admit they don't have internal controls that can result in consistent and accurate financial reporting. That's ludicrous. The next statement, also scary, also verbatim. Core's executive officers have limited experience in the management of a publicly traded company. Another red flag. And I can tell you, as somebody who's been part of a management team, a C-suite of a large publicly traded company, it's not something you just pick up as you go along. Now, can some members of the team be new? Sure. But you better have a couple people in there that have ridden that horse before. It is, and it's not for the faint of heart, and especially in a company like Core, in an industry like ours that is fast growing and fast paced and laden with risk. Man, that's a pretty scary thing. I found in the in the income statement, something very, very interesting that I didn't understand that was also a big red flag, or maybe a yellow flag. Core was spending already at that time almost $6 million annualized in research and development. And certainly in our industry to put some effort forth in R&D is okay. But that's a really high percentage of their total budget, more than a couple percent of revenue at that point, well over a couple percent of revenue at that point. When what they really needed was operational excellence and financial reporting. So all these things are kind of making me really wonder, like, how is it that this is a company being prepared to IPO? But then here is the real kicker. During the 9 months ended September 30th, 2021, the company entered agreements to purchase Bitcoin mining equipment totaling $738 million. Now, their whole revenue for 2021 annualized was only $220 million, yet they were making capital investments at 3.5x annual revenues. I almost don't know what to say with that. Now, in reading the report, one other thing that I noticed in a couple different sections was numerous mentions about use of green energy and the purchase of renewable energy credits, and a lot of focus on how green the company was. Okay, I'm not opposed to the use of renewable energy or green resources, but it does make me question what was driving that. Why was that so important in the K1 or in the S1? But then as I thought about it, I realized, well, there's a lot of mention in a lot of words applying to that. But I realized there's not a single mention about Bitcoin itself. What did Core perceive their mission in supporting Bitcoin? What was their ethos? What was their commitment to helping maintain and protect the integrity of the base layer? None of that. What does that mean? It means this isn't a Bitcoin company. This isn't a company that ever was focused on Bitcoin or had it as a key part of its mission statement. That doesn't make it evil or bad. But I think from the perspective of a Bitcoiner, most of us would look at it and say, well, you're kind of riding the coattails of Bitcoin. You are the largest mining company in the world. Yet you don't, in a massive report in which you discuss your vision for the future, you don't even mention Bitcoin and protecting it as a key piece of your company's mission. That's a pretty big red flag. Now, I don't wish ill on Core, at least I didn't then. But fast forward just 10 months, and I find this amazing. And by the way, they did do the IPO. They raised $200 million in that IPO. 10 months later, in November, they filed a 10Q, which would be a report on their third quarter results for 2022. And I will tell you, 1 month before the company declared bankruptcy, 11 months into its existence as a public company. What they reported was that in 2022, they had lost $1 billion in assets on their balance sheet. They had an operating loss of $1.5 billion and a net loss of $1.7 billion. Through that, they increased their R&D spending to $8.5 million. They only had revenues of $216 million. Remember the operating losses were in the billion? Well, revenue was only 200 million. Yet they spent 60 million of the 200 million on general and administrative expenses, which means things that are not contributing, things not electricity. Those are salaries, those are facility charges and things like that. They had put so many, they had so many loans that they now had notes payable of $977 million. In other words, they had acquired $1 billion of debt by this point. And I'll give you a couple highlights. We won't go through the whole thing, but $80 million borrowed at 13.1% from BlockFi, $32 million borrowed at 12.5% from Anchor Labs, and $70 million borrowed at 13% from Mass Mutual Borrowing. So they were like somebody rolling credit cards, just getting access to every piece of debt they could get their hands on. I just find it appalling, frankly. Now, at the start of that year, at the start of 2022, they had 5,000 Bitcoin. By the end of the first quarter, they had actually grown that to 7,000. And on a gross basis, they were putting in about 1,000 Bitcoin per month. Gross. By September of 2022, all but 1,000 was gone, which means if you add what they started the year with to what they added during the year, that would be 13,000 Bitcoin, yet they only had 1,000 left by the end of September. By December of 2022, they were bankrupt. From a high-flying IPO in January of 22 to a complete collapse and a bankruptcy in the same calendar year. Losing $1.5 billion, losing the $200 million from the IPO, acquiring $1 billion in debt, much of it at very high interest rates. I get upset. I look at this and I see those are the behaviors that I don't expect from within the Bitcoin community. And, I was really disappointed with FTX, with Voyager, with Celsius, with BlockFi, several others that are similar. But to be honest, those aren't Bitcoin companies. They were not companies. If you're a Bitcoiner, they really weren't integral to what we were doing in Bitcoin. Whatever they did was certainly damaging, and it hurt a lot of innocent people. But it wasn't probably to be expected for those companies to behave within the ethos that we profess within the Bitcoin community. When I started looking at the 10Q that was filed in November of 2022, it was their last report before that bankruptcy. The thing that I found most shocking was this statement. Now, remember, this is a company that had thousands of Bitcoin on its balance sheet. It had raised $200 million. It has $1 billion in loans. All of that stuff really is dependent on the price of Bitcoin going up. And yet this statement appears in that 10Q. The company does not use derivative instruments to hedge exposures to cash flows, markets, or foreign currency risks. What does that mean? They were running naked. They had all of those things that they had acquired and built their company around, and didn't do the simplest thing, which would have protected them and protected a lot of the ecosystem from the damage that came about. Because as I'll talk about here in a second, this is not like a victimless crime. Again, what they did, I'm not accusing them of a crime. I'm using that in a figurative sense. But it is just gross irresponsibility. And to me, the fact that the management team of Core didn't see fit to protect themselves is amazing. But on top of that, their board didn't demand it. Their creditors didn't demand it. That's shocking. Like, the creditors did not demand it, and their investors didn't demand it. I think when we look back, we can see there was some sort of almost hysteria going on here that was causing behaviors, not just within Core, but within the whole community, where people were taking risks that were just not needed. And, you know, it's amazing to me because the Bitcoin market is one full of massive swings. So the fact that a swing might happen, in this case downward, was certainly a very high probability, or at least a reasonable probability. And to provide no protection for yourself and implement a plan with all that risk, it's just terrible. You know, this is gross incompetence or greed at its ugliest, or maybe some combination of the two. I find it kind of disgusting. But some of you might say, well, why do you care, Bob? Well, why would you be pissed about this? Well, there's a very specific reason. There's actually a couple reasons. The first one was, if we look at the time period in which this was occurring, they start preparing for the IPO and taking on debt in the second half of 2021 and go public in the first half of 2022. That was maybe the greatest period in modern mining. You know, as in the period in which the mining industry has commercialized and become a legitimate business, it's certainly the greatest period, and it may never be matched again. You know, what happened with the China ban just provided an unbelievable opportunity for all of us. And I do want to point out that in that time period, I want to reiterate again, somehow Core managed to not make money. But even so, what they did was that debt they were acquiring, again, I'll remind you, $1 billion of debt, just short of $1 billion of debt that they acquired. They were using that to lock up supply of mining equipment. As you probably know, there are only 2 suppliers of mining equipment in the world of any reasonable size, MicroBT and Bitmain. And both of those companies have a finite supply that goes back to their ability to get chips, wafer starts. So once they sell out a certain demand, it's not like they can kick in the factories and produce more. No, it's a very finite thing. So the only response is price. Core went in and bought everything under the sun. They clearly did not have a plan in place, which would include hedging and risks that would allow them to execute and deploy that equipment. That's just greed. That's somebody going to the dinner table and taking all the mashed potatoes. so that nobody else can have any mashed potatoes. And that's what happened, by the way. Smaller companies like mine, some bigger, some of the plebs at the small level, we were completely locked out from expanding our business during the period of time in which Bitcoin was having its greatest run ever. Why? Because Core and some others, but Core being just a horrendous offender here, bought everything under the sun. Now, that's a predatory behavior. I've seen in other markets where that kind of behavior has been something that people got sued over. Obviously, there's nothing to sue. Of course, I'm not going to get sued over this because there's nothing to sue. But it hurt. Companies like mine could have grown. I could have easily doubled my business. I had investors who wanted to come into my company, but I had nothing to do with the money. I had no way to expand. I had people who wanted to come in and host lots of units with us. We had places to put them. We had no machines for them to get. It hurt my business badly. Thankfully, because we didn't take on a lot of debt and we did at least a good enough, we were good enough at least in managing our balance sheet and managing our cash flow that we survived this. But there were a lot of companies, a lot of good people with good intentions, with good business models, but that did not have the access to product. And they died. So their behavior was not victimless. I'll also point out that what they did was they completely ruined the pricing in the market. You know, we'll talk about it more in a second, but there was no way to reset the pricing in the marketplace. And it took a long time for the pricing of mining servers to start returning. So even as prices were greatly suppressed of Bitcoin, the price of the mining equipment stayed high late into 2022 and into early 2023, making it again impossible for anybody. Even though the equipment was available, it was priced too high. And it wasn't until about now that we're starting to see that thing settle out and I would say pricing fall back into the right range. So they ruined the market for 2 years. Now, the other thing that happened was Bitcoin itself. So I mentioned earlier some numbers on the amount of Bitcoin that Core held. But at the end of March, Core still had 7,000 Bitcoin on its balance sheet. It was producing about 1,000 a month. By September, meaning so 7,000, and then in the next 6 months, they would have made another 6,000 for a total of 13. Yet on September 30th of that year, they were down to 1,000. So that means on average between May and September, Core was putting 2,000 Bitcoin per month into the market. And while they didn't announce it, I think it's pretty obvious that most of that occurred in May, June, and July, that they were just pumping it in. And then in the second half of that year, they were selling it as fast as they mined it. And all of that had this massive effect compounded with what was going on with Celsius, Voyager, and BlockFi of suppressing the Bitcoin price. And I think we throw a lot of that on the backs of those companies in the lending world and the evils of rehypothecation. But the mismanagement at Core is a big contributor to this extended bear market that we are in. So at the end of the day, you know what happened? Core Core's behavior hurt all of us. It hurt people in the mining sector more than anybody, but they hurt the average pleb a lot too. Average pleb got locked out of mining. Average pleb who was holding Bitcoin got whammied. Price allocation or capital allocations and price discovery, they were all ruined. And at the end of the day, what when we look back at this, I think what we say is, hey, this is fiat behavior. This is what happens when Wall Street mentalities try to come in and run a Bitcoin business. But still, they do it with the ethos of Wall Street, not with the ethos of Bitcoin. There are some rumors that Core may be trying to come out of bankruptcy. I don't know. I know they've continued to operate to some degree under bankruptcy. Maybe they come out, maybe they don't. And it appears that maybe a lot of the same players are still going to be involved if they do. And nothing against anybody personally. But that was a team that wasn't ready to run a public company. It was a team that clearly demonstrated they don't live within the ethos of Bitcoin. And so I will say, if you are a Bitcoiner, if you have bought public mining stocks before or are thinking about buying public mining stocks, and specifically if you own or are thinking of owning Core stock, I challenge you to sit down and ponder what and who you support. Now, you may be able to turn that stock into some fiat gains, but it's not an investment in Bitcoin. In fact, it's pretty clear to me that it's an investment against Bitcoin. So invest with whatever you think is right for you and your family and your conscience. But to me, the answer is very clear. And the damage is going to last for a long time. And I'm a forgiving person, but I'm not going to forget. And I hope we as a community don't forget and we learn from this.